Welcome to Stockradar Stocks on the Move for another week. Today's date is the 30th of March 2023. My name is Richard Lee and I manage the stockradar.com.au website for you. Well, crazy days out there at the moment. The market's having trouble at the highs there. It's been a bit topsy-turvy. The ASX chart is very difficult. At the moment, the markets have gone a bit sour and confused. As we sit below those all-time highs, which are certainly resisting any advance at the moment. And fair enough, there are some stocks out there doing okay, and they're our focus, not the ASX 200. So, talk a little bit about trade plans today. You can see the guy who makes all this money here, that might be a little bit rich, but you get the idea. You need to follow those systematic processes to generate that amount of, you generate your profits. Okay, so firstly, let's look at the ASX, the top 10 trend intensity ratings for last Friday. We had Auckland. It'll be a bit changed this week. It's a bit topsy-turvy, and we always find, a lot of huff and bluff during the week and volume ups and downs, but then we get to the end of the week and we find often there's not a lot of difference. So we let the week play out and let all those day traders whip the markets up and down and do their thing, and at the end of the week we make our decisions on a weekly basis, giving us our great perspective. Okay, so Auckland International, we can see FANG in there, which is an interesting ETF, which is starting to push high, but a little bit positive on the Nasdaq lately. We'll have a look at the chart in a minute there. Some of the other stocks there, all done really well. FPH is starting to move to new highs. Boral's doing reasonably well. It's come back a bit, but most of those ones there are doing okay. Pro Medicus, Qantas, all those. So they're all the top 10 trend intensity rating for this week. Okay. Now, so this really is just a bit of a snippet of part of the Trading Centre. We update all our stocks every week on there, okay, for you. I may not give a lot of stock picks on the YouTube videos, but remember, this is a free service and most stocks are the domain of my members, okay? They're my important people. But what I do is I show you how to build an argument based on a trade plan of processes, so you can at least evaluate what I do and how I arrive reasonably and logically at the decisions I make. And I'm hoping this helps you understand the markets a little bit better, okay? So by joining Stockradar, your learning journey continues and hopefully never stops. As we discuss, provoke, challenge all aspects of behavioural analysis, trading, and the management of a portfolio of stocks. Okay, so we try and give you a bit of an idea of everything you need to know to run a portfolio of stocks, and that's what Stockradar does. Okay, and in the Trading Centre in the Trading Tactics this week, we will go through a little bit about trade plans and just a bit about how the structure goes and how they look, just in a very sort of stand back sort of view. So that's an interesting part as well. Okay, so let's now go to the markets. Dow Jones Industrial Average. It's had a little bit of pressure on the downside. It's tried to rally the last couple of weeks. Hasn't really made a lot of ground on a lot of volume, so we're not that happy about it. We still see the pressure down there. Okay, so that's the Dow at the moment. The S&P and the Nasdaq are both a bit more positive because they're coming from lower levels, but we see some very good volume pushing the indexes higher the last couple of weeks. Momentum's gone neutral, but it is getting a sort of a higher low here, which we like. We really like to see this R1 fall, and then we could look for a rally back to the highs there for the S&P. At the moment, it's sitting mid-range between R1 and S1 at the moment, so we'll wait for one of those areas to break to give us our future direction. Nasdaq, trying to base out still, and is doing a pretty good job at the moment. And we can see a nice lot of green bars here appearing in here as this market tries to hold up. We've got a slightly higher low here, which is sort of encouraging. But these are really the bands, the S1, R1 bands are really the levels we need to look through if we're going to go from this trend accumulation back to uptrend phase for the Nasdaq. It's always the question is how long is it going to take? So sometimes we get a bit excited and we anticipate, but we need to be patient and disciplined about this process of bottoming. And you'll see a few stocks that I'm going through today, which are similar situations where they're trying but haven't quite got there yet. So we just have to wait and be patient for them to deliver the price action we want. Okay, so now we go to gold. It's pushed right up into the highs, up at 2,000. It's trying to get through. We've had some good volume there, good momentum. It needs to get through pretty quickly or it's going to collapse again. So again, the gold stocks are not my favourite, as you know, but we'll wait and see. If gold does start to push through here, then we might get an opportunity to chop into a few gold stocks if they give us some signals as well. So that's gold at the moment. Copper is struggling mid-range at the moment, as we know. The trend is sort of up here. It's come back in a sort of a flag sort of formation to a bit of support here. So it's not over yet, but there's certainly plenty of selling certainly plenty of selling and buying going on here in copper. So it's certainly a bit of it's not a definite move upwards. It's certainly a two-way bet. We're rotating around this big area here of support resistance. So we're a little bit neutral on Dr. Copper at the moment because we're not really too sure what's happening. It's a bit mid-range at the moment. Brent crude is pressuring down. Okay, still down, still pressuring the support level. We've had a week or two which has tried to rally. Not a lot in it as yet, but that's Brent crude for the moment, and it is just sitting there, pushing down all the time. Rallies are getting knocked about. So that's your commodities and that's your indices at the moment. Okay. So now we're going to look at the ASX 200, and it is interesting what's happening at the moment. We've got to be very careful about the market because really we sometimes lose perspective on where we are at, and we are at a big resistance level, all-time high, and it is not getting through at the moment. Okay. Now, one thing I do want to show you here is if you see this little part, this little downtrend from the highs here to here, we have no volume on this chart here, but if I can show you this. This is a chart from investing.com. This is the same sort of chart that we're looking at on my Pro Real Time. And you can see this big move down from the highs I was just talking about. And if you look at this volume here, it's been very, very, very heavy. Okay, so that means to us, suggests to me that we are going to see a move down towards here, basis the ASX 200, okay, and this is certainly going to be very, very hard to get through at this stage. So we're in a fairly difficult stage. We're at some highs. Just be very, very careful with what you do at the moment. And we look at this index here and the volume here. We can also see, remembering that this ASX 200 really is a top 20 chart. So if I chart the top 20 against the ASX 200 here, you can see they move very, very closely together because that's what's dominant. So if you plot it against one of your charts, you'll find there'll be a very different pattern there or a very different correlation. So that's why we tend to step back from the ASX 200 or the ASX 20 as it really is, because there are 20 stocks that dominate that index. Okay, so that's just our market. It's struggling at the moment. We've had a bit of a rally here, a bit like the Dow, but this is certainly looking on the cards. When I look at that volume, it does worry me a bit about the amount of selling. And this was a fairly steady fall here for about almost 2 months down there. Okay, so that's the ASX 200. What I'm going to show you now is the stock pick count. Okay, so the stock pick count now is down another 5 this week. In fact, we lost 6 and we picked up 1, which is an ETF. And we lost 6 stocks and we picked up 1 ETF. So now we've got 36 stock picks of 160. So we're easing back again, cutting that risk, getting out of some of those stopped out positions. And 4 ETFs, they're mainly indice ones. For like the Nasdaq and things like that. So stock pick update, it's moving towards more neutral status at this stage. There are some stocks going up which we'll look at, and you saw on the front page there, Boral and a couple of other ones which are doing quite well. But for the moment, the stock pick count isn't that happy. And when we look at the portfolio update each week, which I go through, this is from last Friday, remember. So the conservative portfolio is 4 out of 20, and that's not a lot. 20% in equities, that's pretty bad, okay? The Energizer 5 stock, which is normally full, has only 2 stocks out of 5. Why is that? Because we've had quite a few exits the last few weeks and no entries. So you've got to replace the exits with entries, and we haven't had any triggered, so we're down to 2 of 5, which is okay, which means we're at 40% equity, 60% cash on that Energizer 5 stock. The Stockradar has been running for 20 years. The 10 stock is down to 7 out of 10, okay, so it's also come back a bit. It's a little bit more positive. It tends not to be as volatile as a 5 stock, and that's what we see play out. So it's about 70% equities at the moment, 30% cash. Then we go down to our other shorter term one. The Energizer 5 stock that we started in August 2020 is down to 2 stocks out of 5. 40% equities, and the 5 stock we started in March 21 is down to 3 out of 5. So you can see these portfolios are usually full. So we're a little bit concerned about what's happening but that just means we just stop out the stocks that aren't running off, and we hold the ones that are, and there are still some stocks that are running. So we'll keep an eye on that. So, the market's pretty crazy at the moment. We're seeing a lot of stocks changing during the week. I get phone calls during the week about what do I do. I say wait till the end of the week. A lot can happen in a week, but it's always interesting to see where it finishes the week.
then more often than not, you wonder what all the huff and bluff was about that you get caught up with in during the week. So that's that weekly thing of pulling us back, getting perspective, taking us the emotion out. So that's what we do to try and control ourselves. Okay, now, so that's all the chit chat. Let's just go to some stocks now. Okay, first off, a few interesting stocks I want to talk about. As I said before, this is really about educating you on what I do and how I put a case together. Not meant giving you all the stock picks. I'll give you a little bit every now and then, an interesting stock for you, just to sort of show you what I do. But mainly I'm talking about stocks and how they're performing and what the structure's looking like. And if I look at Aristocrat here, it's had its big uptrend, it's had a distribution pattern at the top and a big downtrend and now an accumulation pattern. And we did have a short buy here, back in November, which got stopped out pretty quickly. Okay, so that's fine. As long as we listen to what we're doing, we're stopped out and we're back again. We've come back now down around that $30 level, which is turning into a bit of a good support level. And now we're rallying again on Aristocrat. It's created a higher low here. This is sort of like an accumulation pattern. So we're waiting for this new uptrend phase to appear. I was hoping it was going to be from here, but it wasn't. It may be from here. We'll have to wait and see. So we'll wait for this to break, and then it gives us a chance. The stock is down 36% from high to low. It's going through an accumulation phase at the moment. Trend intensity rating is 0, which means we are neutral. Okay, so we can see here it's above the average. Momentum is getting better, but there ain't a lot of volume in there. So with not a lot of volume in there, it doesn't make me so happy at this stage. So we'll just watch this. Patience, discipline are those two words we always use again. So that's Aristocrat at the moment. There will be a great opportunity here, but for the moment, not just yet. Interestingly enough, James Hardie has a very, very similar pattern. Totally unrelated industries, but they're working together in tandem. This one has had a 50% correction from high to low. And again, that's something we need to remember. Every now and then we sort of say, well, it's come down 50%, and then a couple of weeks later we forget about this. But it's actually down 50% a long way. So it's sitting in this phase here, not down 50% at the moment. It's come off the lows a bit, but it's in a really good spot to be bought. Any stock, big leading stock that comes down that towards 30 to 50% has got to be looked at as a buy. Okay, so we're now assessing this as a buy, and Stockradar waits to get our actual trigger. Okay, so here we've got James Hardie's come down. It's made a new low here. It's rallied up to this R1 level again. It's trying to create a higher low. Maybe it will, maybe it won't. But this one I like a little bit more than Aristocrat because I've got a little bit of volume here. Now, it is two-way volume, but that does mean there's buyers as well as sellers, which wasn't really evident on the Aristocrat chart. So this looks interesting to me. James Hardie's not a big yielder, but it does move in growth. It moves beautifully in trends. So we wait for this new trend to emerge above R1, and then we're looking for R2 for this to recover. So that's what James Hardie looks like at the moment. His trend intensity rating is -8. That's of last week, so it's a lot worse than Aristocrat. It's a bit behind the 8 ball there. But it's still looking interesting and it's certainly worth watching for me. So that's James Hardie and Aristocrat. I talk sometimes about the new stocks, the new floats, the listings, the spin-offs. Often they go through this uncertain phase of new listings as to people don't know what's happening. They get bullish, they get bearish. They're not sure about the stock, are the projections real? Are they not? Are they going to meet them or not? All this sort of stuff. So they go through this uncertain period. So Endeavour Group has done this. It's a pub business. There are lots of pub things happening in the pub world at the moment, but it's having trouble. And that's because there are plenty of sellers up here selling this stock. So, but if we look at it, the stock from the listing period has had a rally, come back to this level again, $6, rallied, come back to $6 again. Now we're getting a lift off here. This is probably a very good buying place, a very low risk buying place for Endeavour. It's been tested 3 times there, but I will wait always for the trend reversal to occur. We are getting some volume here. It's moving above the average. This is it's starting to come back towards zero. Not a lot, but it is encouraging. So for Endeavour Group, we will probably wait for this to kick off. But it's still trend intensity -7, but it is looking very interesting at the moment. With this little downtrend here, volume, it's looking quite good, and it's probably ready to have another go at R1 and see if we can get it to break through. Another one you might want to look at, which had a bit of a rally yesterday, was Deterra Royalties, which is a similar sort of stock with a short history, a demerger stock, but looking very interesting at the moment. So have a look at that chart because that's certainly worth having a look at. Okay, another one, just a very simple, clear picture of what's happening with the stock, and some stocks we don't like, but if we look at this pattern here, we have a low point, we have a high point, we have higher lows. So what do we know about this sort of pattern it creates? This is a trend reversal pattern because we're coming from up there. Okay, so which stock is it? It is actually AGL. and we can see very clearly the pattern here. It's come from, I think, $28 was the high up here. It's had a beautiful trend down for those who like to short the market. Fantastic situation. But then we're now getting this pattern off the lows here of, which we just saw, rally to a high and two higher lows. We're now starting to get a little bit of volume here. The momentum index is pretty neutral because we've gone through this long period of accumulation, and that's what we like to see. So AGL still rating -3. It's still right on the average. Volume's a little bit better. Momentum's still below, so they're all just a little bit negative, and they could turn positive very, very quickly. Okay, so that's just AGL. It's one to put on your watch list and wait and watch. And on Stockradar, trend intensity table, we will let you know when we're going to buy this stock. But for the moment, this is a stock, and it's a very interesting situation. What's happening there? A lot of shuffling there. In the corporate world, as far as AGL goes, a lot of opinions and controversy, things like that. But generally, the market looks like it's turning. So that's a good one for AGL. Keep an eye on that one there. I just want to look at a couple of stocks here, a couple of the big miners. I talked a little bit about the ASX 200 before, coming down off some big volume, being at a big resistance level. That's fine. And we now look at BHP. It tried to break higher and it failed, and we've been stopped out of that one. We had a position, we've gone. Okay, it's now trend intensity rating -5 as it starts to come off this high here. Okay, so that's BHP, and that's a big resistance level. That's a pretty well an old high, all-time highs up here. If we go and have a look at Rio Tinto, not that dissimilar. We've still got this huge three times test of top up here, trend intensity -1. You would make a bet that this is going to come back to $90 on this one if it continues to be true to its trading range. Okay, the low to high is 33%. It's come off here, so interesting area once you get down here. But we can see some volume going off. This is starting to dissipate a bit, so there's certainly pressure on the downside here, and we are at resistance, which is something we need to remember. Okay, now if we go across to Fortescue, they're all a little bit different, and BHP is a bit more diversified than Rio, and Fortescue is definitely a one product wonder, apart from its future hydrogen thing. But for the moment, iron ore is where it gets its money from, and you can see very clearly here for the last 2 years, $24, $26 has been the high, and it's resisted, and again, it's just resisted again, and it's coming off, and we're starting to see a bit of selling appear. A little bit of oomph has gone out of the momentum index. We're testing the average. Trend intensity rating is -2. We never got to buy on this one. So you can see from those three stocks, there is pressure at the highs. So we need to be very careful about what we're doing. That's not to say there are not plenty of other opportunities which we're looking at, but I'm just giving you an idea of some of these big stocks are doing at the moment. Okay. So that is the miners. The one I talked to you about last week, which was Ria Group, which is looking very interesting, is now starting to push on this R1 level, and as it tries to complete a reversal or an accumulation pattern. Again, we've got this uptrend, sideways pattern for a while, distribution, downtrend, sideways pattern for a while, accumulation, and now we're getting looking for a trend phase, and we've got some beautiful volume here, and momentum starting to kick above zero. So for once, we're starting to get that alignment of the stars where we have trend break, price break, we have it's above the average, we have good volume, and we have momentum turning positive, and that could give us very quickly a trend intensity rating of 10 for this stock. So I know they can be a little bit jumpy around, but it's an interesting stock. Not a lot of yield on these ones, unfortunately, but it is creating a trend reversal pattern here. So again, this is one that we do give you a tip on this one. So Rare Group looks quite interesting at the end of this week. Okay, so that's Rare Group. Two other little stocks I've got for you here, which we actually don't cover. Actually one we do, one we don't. Net Wealth we don't. It's had an interesting start to its history. It had a huge rally on the back of these platforms, but then it's had a bit of a sell-off, big distribution pattern, came down, found some support at S1, and now we're starting to form a reversal pattern here, higher lows, and this resistance point here. So it's starting to look interesting. A break above here for Net Wealth could give us a move back towards $18. Volume's not fantastic, and momentum's neutral. So a little bit jury's out on this one. Price being the most important, we'll keep an eye on this price. It's got a little bit further to jump up to break through there, but it looks interesting at the moment, Net Wealth, after a long period, 2.5 years of going down to sideways. Okay, Nine Entertainment, another stock which had a fantastic run a while ago, and we got a good part of that run, which was a nice little profit for us on this one. And then it went into a sideways distribution. The smart money is selling in, giving it to the retail buyers. Okay, that's what happens at the top there. Then eventually the retail buyers give up and go home, and down the price comes, and then it gets to a level where the smart money is starting to buy back in again. Okay, and the smart money is buying back in around about S1, which is around about 180. Okay, so we're now starting to get this accumulation pattern, and what happens after an accumulation pattern? We get an uptrend. Not until we get a signal though. So R1 has to be broken yet, but we've got this series of lows here, which is very good support. We're now starting to get some very, very good volume here, holding this stock up nicely, which is positive. This has still got a little way to go, and the average is just above the price at the moment. But a move through the average and this put R1 would certainly give it a kick. And with the volume there, we just need a little bit more MACD to give it a full maximum rating. But for the moment, it's come down 41%. It's in that window. We're getting good support down here. You can probably look at support area around here as well. But I'm really looking at this R1 level now to give me the signal that this is going to move up again. So Nine Entertainment, I think, looks very interesting. So keep an eye on that one. Okay. Many stocks slapped around at the moment. So there's a lot of trend reversal, buy and weakness things happen for those. For those looking for buy and weakness, there's lots of trend reversals happening at the moment. Not a lot of new highs, but there's a few there. So there are some trade opportunities that are beginning to emerge, despite that overview that I talked about, the ASX 200, which is the top 20, and those big miners. There are plenty of other stocks down here that are going to still do well. So things like, I talked to you about Brambles last week, looking very interesting again. Telstra's looking very interesting. So, there's a few stocks out there that we can look at that are in the right part of the cycle that are ready to go. So keep an eye on them. If there are no stocks hitting in the radar, the best thing you can do is follow what trends there are, ones that we do have. Okay? So that's about it for the charts today. I'm going to give you a bit more on trading tactics now. Trading tactics fairly quick today, fairly simple. I talk about the trade plan, and we must have a trade plan to operate, to control ourselves, to guide us, to navigate the market. It's all very difficult. So what we've got to do is with the trade plan, we've got to box it up and keep it nice and safe. We've got to box up that trade plan, those rules, and all the things we have. To make it nice and safe and insulated. And we've also got to push back on things like expert analysis, push back on biases that we have, confirmation biases, anchor biases, things like that. Push back on the expectations we have, reel them back in, make sure their expectations are real. Forget about the news, forget about worrying. It's not going to help you do anything, okay? So if you think Mr. Journalist on Channel 9 knows about the markets, well, good luck to you, but not a lot I wouldn't have thought. But anyway, that's my opinion. So make sure your trade plan is boxed up and safe. Okay. Right, here we go again. Box it up. So the strategy in the middle there was, for me, was trend, volume, average, and momentum. They're the four tools that I use to make my decisions. Okay. So nice and tight and protected and insulated from these things here. Okay. But what we do have, we have the four quantifiable analysis components, which I quantify with my setups and my trend intensity rating, my trend, volume, EMA, momentum. Okay, so those four quantifiable components are then surrounded within a trade plan that has a predefined series of controls, which would be portfolio size, it can be data universe, it can be stock allocations, how much do I buy, how much do I sell, market cap, where do I operate in the market cap sector, sector weightings, how do I manage that? This is not an exhaustive list, but these are controls you must have in place to control what you do. Because if you're making decisions all the time, you'll probably make the wrong decisions if you're making them on the hop, as we always know. So that's just a bit about the trading plan. So make sure you keep it nice and tight. I will get people ring me up during the week and say, well, your such and such stock looks really good. The price has gone down during the week. What do I do? Or someone from the radio said to me yesterday that this stock is going to go down. And I'm going, my golly gosh, why would you have a trade plan that you've based all your time, effort, work, you've devised it, you've designed it, you've built it, and then you want to go and listen to somebody else who knows nothing about it and you worry about that. I'm not quite sure how that works, but try and cut all that sort of stuff out because it won't help you at all. Okay, so the trade plan has to work in isolation. It operates in isolation and it doesn't have outside inputs. That's the whole purpose of a trade plan. Okay, so going back to my initial chart, a trade plan is where you're going to build your truckloads of money. Now I know the market's been difficult for the last couple of years. We've seen a lot of whips and ups and downs. We've had a lot of stopped out over the last year. We've had some good profits as well, but it's been tough. But we've been working through a very, very sideways period of the market, which is very untrend friendly for me. So we survived this period of the market, but we know when the market does pick up, that's where we're going to really make our money. So we'll be set for that when it happens. Okay, so just have faith in what you do, faith in your trade plan, and faith in how it all works. So we build a trade plan for a reason, with the best of intentions to guide us and tell us what to do. Why would we then go and listen to somebody else? Decision process. The trade plan, then we look for confirmation analysis. If we find non-confirmation, then we worry about what we're doing. Why are we doing it? But don't listen to that person outside, okay? Don't be stupid. Listen to yourself only. Once you get used to the idea that no one really else knows, that's a positive step forward in understanding how the markets work. Okay, because these guys won't really help you. So insulate your trade plan, as I said. Okay, so that's the trade plan. The trade plan controls all aspects of managing a stock portfolio. If you find you have something that you are making decisions on while you're trading, then that needs to be built in, quantified, so you don't have to make a decision, because a trade plan makes your life so much easier, because it says, if this happens, I do that. If that happens, that happens, I do this, and on it goes. So for me, at the end of the week, I go through all my charts. It's really bang, 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 bang. That's the decision. Bang, bang, bang. This is the decision. That's really how it works. Okay, so it makes your life a whole lot easier. Things just roll out and plan, and then you get confidence in that trade plan. Okay, so that's the trade plan I want to talk about today. What's happening at Stockradar? The newsletter is out probably tomorrow or today, even if I can get it out. We have our macro view, which gives a market overview of events, products, and issues, highlighting education as a key tool in preparing us all for what the market throws at us. Okay. Then we have the micro view, which we drill down and analyse a group of stocks, and this week it will be the health stocks. Then we have the Radar's Rant in the newsletter. The Radar's Rant is my turn to talk and discuss issues with you that you should know about, that relate to analysis, trading portfolios, understanding investor behaviour, the systems and processes we use, all things to do with the market. Okay, so I have a bit of a chat about it, and I thought I'd throw a few challenges out and a few barbs and things like that, just to keep it all real. And then the next part of the newsletter is a small cap alert. That's where I look at some small caps outside the normal 160 that I look at. Okay, now these stocks, I cover one a month. These stocks are usually stocks outside the top 160 that I use, but maybe moving into that area, maybe an emerging star. So we're looking for some of those stocks that are really going to come into the portfolio. So that's just a little bit of a side one that I have in the newsletter, apart from lots of other things, charts, and tables and things like that in the newsletter. So get into that. That'll be out later on today or tomorrow. Okay, so that's all we've got today. Don't forget, the trade plan is your friend, compatriot, guide, saviour, your rock. All these things and more as it guides you safely through those shark-infested waters that is the stock market. This is a bit of colour to make it sound a bit more James Bond, but really the stock market is mostly about simple common sense and being focused and disciplined. We must work through difficult periods, and that's a simple fact of stock market life. Don't get too despairing about it. And it's also the challenge to us to see it through and come out the other side with a big smile on our face. Hopefully. The market spends 81% of its time rising, and it's spent the last couple of years going up and down. So we're in for a period of levity at some stage, but I've got a funny feeling the market, or the ASX 200, might come back a bit in the first place. Okay, look, that's all I've got for today. Lots and lots happening at the market. There's some great stocks out there, despite what I say, to make a bit of money. So keep an eye on those ones, and keep an eye on, and make sure you listen to your trade plan. So stay safe, watch your trends, heed your stops. Give me a call if you need a chat. I'm always here to have a chat with people. And I look forward to seeing you all again next week, and hopefully give you some more insights. Thank you.